So tumeongejwa money market funds. Treasury bonds. If I want to invest in treasury bonds today, what do I do?
Yeah, I think it's quite easy nowadays because of the recent developments in the DAOs, the recent developments by CBK. So recently, I think it was late last year, CBK launched the DAO CSD platform. Yeah, which makes the account opening of a CDS account very easy. So a CDS account is what you use to invest in T-bills and T-bonds. So before DAO CSD was launched late last year, I think it was in September last year, if you wanted a CDS account to invest in bonds and bills, to physically walk in
A bank.
CBK offices.
For CBK?
Yeah.
Oh, yeah.
And to open an account. And account opening used to take quite long. 14 days. Some clients will even take a month before they got their CDS accounts in check. But now with the app, you just need to log in, your account, your KYC details within, I think, 24, 48 hours, you have your account.
Okay.
And then now just the bidding process, which is very easy and straightforward. Okay, maybe for the normal person or maybe for the average person, it's not straightforward. But I think right now there are a lot of resources about that. I keep on doing the threads on that. There are even guys who have YouTube channel people on how on the processes, articles. I think it's quite easy after you have opened your CDS account. But what you just need to understand is that the minimum investment is 50,000 for T-bonds, 100K for T-bills. Yeah, then the bidding process, you're also bidding on the app. You can either bid competitively or non-competitively. You usually advise clients to bid non-competitively.
What's bidding?
Bidding is now, the bills and bonds are auctioned by CBK. So you have to bid for... Bidding is now the process of buying now. Before you buy, you have to bid. Then your bid must be accepted so that now you can make the payment from your bank account to the CBK account. Yeah.
Okay. So kishazibai unazishikilia?
Yeah, so bonds have maturity dates. So you can T-bills are the shorter term securities. You have the 91 day, the 364 day, and the 91 day. We have the 182 and the 364 day T-bills. So these are the short term securities. Now T-bonds you can have maybe from 1 year to 30 years. Yeah. So depending on the maturity date of your bond, you have the most recommended strategy for retail investors is buy and hold. Yeah, because the secondary market isn't always an easy walk. For most retail investors. Yeah.
Okay. So maturity date ikifika, I have to take the money. I can let it compound.
Okay, so maybe something that maybe I forgot, maybe something that I'm assuming it's straightforward is that how you make money by investing in T-bonds. Okay, T-bills are the short term, so T-bills are discounted. So maybe you want to invest maybe 100K in a T-bill. So you'll pay a discounted price of let's say 95,000, maybe 96,000, and then at the maturity of that T-bill you'll get your 100,000 back. So that's how you make money in a T-bill.
Okay, so you make this 5K.
Yeah, that's the discount because it's something short term. But not for T-bonds, you have to. They are long term. Yeah, so there are coupon payments that are paid. So coupon payments is monthly. Monthly, it's the semi-annual interest payments, not monthly, but semi-annual interest payments. So that means if you invest 100K in a T-bond at maybe 16%, that will be 16,000 per annum. Okay, let's assume it was an IFP, so let's not deduct the withholding tax of 15%. So 16,000 will get to in two semi-annual interest payments of 8,000 after every 6 months.
And then you can take your 100.
Now you will take your 100 after the maturity date. So if you had bought maybe a bond that was maturing in the next 5 years, you'll keep getting your interest payments, maybe your coupons every year, twice a year, until the final year you'll get your money back.
So okay, this is interesting. So let's say I invest 100,000 in T-bonds. Na nini ya 16%. Yes? So I'll get this let's say 16K till the maturity date. So every year the 16K.
Yeah, but we have not accounted for tax there. There's a 15% withholding tax, but FBs are tax free.
See, the 15% is from the 16K.
Interest, from the 16K.
Okay, so
that will come.
Let's even push it on the higher side. Let's say it's 25%. So that means I'm making 12K. So this 12K, if the maturity date is 5 years, I'll have made 60K before I get back my 100. Okay, and I can still decide not to withdraw the 100 to just stay there. Now after maturity I have to take it back and then
after maturity there are a few options that you can do. So you can either get your money back or maybe you can use the money to buy another bond.
Okay. Oh, but you can't just continue like
Yeah, it's not automatic.
it's
when
not
when you are bidding for the bond, maybe when you are making the applications, you can either decide what to do with when you get your money back. Are you going to use it to invest in another bond, or do you want it deposited in your just bank account?
Okay, alafu there is a difference in the money market fund. In that with the money market fund, I can just get my money out at any time. Sindio?
Yeah.
T-bonds I can't.
T-bonds, okay. For T-bonds, it's not straightforward, but you can. Okay, you can't. The liquidity is how fast you can access your money. Liquidity for money market funds is quite high compared to T-bonds, but they're still liquid in the fact that you can sell your bond in the secondary market. So let's say investor you're 10M this year, and maybe maybe you bought a 5-year bond. Maybe at the second year you get a financial emergency, or maybe you get you urgently need your cash back. You can sell your bonds in the secondary market and get your money back.
Okay.
Yeah, but now selling in the secondary market, now you can also, obviously, in some cases will make a small loss, because now it's a market that's being determined by buyers and sellers. So depending on how yields on the past and current bonds are performing, you can either sell at a higher, maybe at a lower price.
Okay. So then the other question would be like, if we come as Steve saizi, you have a 2 million shillings that you want to invest. Na 2 million, you're 100% sure, even if you have a financial emergency, you'll never want to use this 2 million. What would you invest in? A money market fund, treasury bonds, or treasury bills?
I think I've always get those questions where people are asking, which is the best avenues to invest in. But I think you can't really take the question out of the financial situation of the person.
Okay.
So like you have to take you as Mwafrika and say, okay, this is who I am. Okay, this is my level of wealth. These are my financial goals. So this is my age. This is my risk appetite. These are my financial goals. You have to take account those things that are attached to you, that are personal to you, and then bring them in the equation.
Okay, let's say
that's how it will affect different people.
Someone with a low risk appetite. That means I'm trying to make a safe staki kitu itanipatia heart attack like nimeamuka nilikuwa nimeinvest. What were they saying? Were they saying that like people who invested in Nation Media Group at 1 million, I think how many years ago, saizi their 1 million is 40K. I had something like that.
That's something that I've seen in the financial industry, and maybe I can just point it out here, but I don't like such comparisons, because we call that financial porn.
Oh, okay.
Financial porn.
Okay. What Ian loves. Okay.
So what financial porn?
I'm a porn addict.
What financial porn is? We'll see guys doing maths like, okay, if you had invested, maybe when Safaricom was doing well, maybe right now the hottest asset, maybe it's Bitcoin. So you'll see guys saying that, okay, if you had maybe bought Bitcoin at this amount, you'll have made this kind of money. But what you forget is that there have been challenges during that process, maybe in the last 5 years. Okay, maybe I can give a better example. It's maybe one of the best used example is maybe a company like Apple. So people who say that, okay, maybe if you had bought Apple maybe 10 years ago, you'll have made this amount of money. So you are trying to make the investment sound fancy or maybe good, but
they're in between. There have been a lot of challenges, a lot of panics. There are a lot of people who have sold. It will have taken a lot of courage, a lot of guts to hold that investment for that period of time. So whenever we're talking about NMG, which is maybe probably one of the worst performing stocks, also talk about the best performing stock. Like just give a standard comparison. Just don't be one-sided. That's what we call now financial porn, which is not good, and it's very very prevalent in the Kenyan markets when people are doing analysis of stocks or maybe comparing one asset to the other. Okay. Alafu najua there are people who will see the irony in what you said. I don't know if it's the irony ama vile umesema at when you're talking about like bad stocks kama the Nation Media Group, you have to give a standard comparison.
We put all groups together.
But I think it's all like traditional media, especially rely on Gazeti. They've been struggling because of how much technology has changed. I think I had this with Jemo Ulemse alisema every time you're reading a newspaper, you're reading yesterday's news. And I remember when he said that, I was like, back in the days, this was actually news. You'd read a newspaper and you'd be like, this is news. But actually, right now, you're reading yesterday's news. People have moved on. Like, so kuza gazeti inakuwa like, apart from think pieces, like why are we not buying newspapers,
Actually, there's a guy called Balaji's who was the former CTO at Coinbase, which is a crypto exchange firm. think it was in around 2020 where he was making the predictions that we are moving from the standard or maybe from the conventional media houses to whereby we'll have individual media houses. If you look at guys like Joe Rogan, guys like even here in Kenya, guys like Abel Mutua, there are some brands who will be bigger than media companies. And now with the ability of maybe platforms like social media and YouTube, anyone with a mic and a camera can start doing their own things. You can become your own reporter and still deliver better news, quality news than what maybe a media house can do in some angles. So that if you look at the rise of platforms like Substack, newsletters, you can see a lot of people are becoming creators. So that's how you'll see more people maybe moving from the traditional media industry not to the digital world. So I think he made a very good prediction which is coming into play.
Because like one of the saddest things that I feel, because I used to work in easy mainstream media, but right now apart from the old presenters I don't know anyone. Like I know mi najua Jen Goiri, najua Rashid Abdalla, najua Lulu Hassan, but if you are employed by Nation last year skujui na si ati nakukosea heshima, I just don't know you because I get my news on Twitter.
You don't even know how to tune.
Yes.
I can't tune into you. Like it's like a whole different nini. Like you have to push some buttons, save whatever. Like
news yangu kitambo nilikuwa namkaga asubuhi nasikia this is 7:00 news, this with Laura Walubengo. I don't know the Laura Walubengo of nowadays. Like who is he or she? Simjui. And that's how much the world is changing so much that now maybe these media stations nakaka the story of the Polaroid camera where I don't know how true the story is, but they were offered a certain amount of money and they said hatuichukui. Then a few years later digital phones started taking photos na stock ya Polaroid ikatoka from hapa too, because remember it used to be the best technology because I could take an instant photo na ni print. So technology is harsh.
The point I think the point that Balaji was talking about, decentralized media, decentralized finance, we're moving to the decentralized era. You can see even Bitcoin and the blockchain technology, everything it's becoming decentralized nowadays. So even media houses are becoming decentralized. We are not relying on one media house to give us information. The centralized media house or maybe the mainstream media houses, we can rely on different guys and still take that information as okay. We might negotiate. Maybe we might argue about the truth, or maybe what do you call it? Maybe they're not a trusted media house, but with time you can be able to build trust. With a bigger following and bigger audiences, can be able to build trust.
Okay, and then you also talked about circles. By the day we are recording, I think the previous day there's someone who'd written about a circle and you'd corrected them. Most students who are Americs wanajuaga, one of the things he teaches people is join a circle. So how important is it to join a circle?
Okay, I think the biggest advantage of a circle is the ability to access, I'm not going to call it cheap credit, but maybe I can say affordable credit, maybe affordable loans. Because if you look at what loans are, what rates banks are lending money to individuals right now, after the CBK raised the CBR rate, I think it was it late last year? Yeah, late last year. Most guys have gotten the messages from their banks telling them, okay, your loan facility, which was at 17% per annum, has been increased or has been revised to 19.5%. There are some banks with high loans at rates at maybe 23%, 25%. But your circle most circles are still at 12%. So that opportunity to get an affordable, maybe to have an alternative source of credit, I think it's the biggest advantage in a circle. But there are also other advantages because the saving your money in a circle. So there are two ways you can make money in a circle. One is through share capital, then the other one is through the savings. So share capital is the number of you buy shares to become a member of a circle. So let's say we have Mafrika circle. So to be, let's say under our rules and regulations, we have that for you to be a member of Mafrika circle, you have to have bought 1,000 shares. And each share is maybe 200 shillings. So the minimum share capital is 200,000. So that's the share capital. Now the share capital, you get returns via dividends which are annual. Then savings also, for most circles, the contributions are compulsory. So you must make a certain amount per month. But SACCOs nowadays are shifting from that, and their contributions are voluntary. That means you are on your own. If you feel like making contributions, you can make them. If you don't feel like it, you are on your own. But now on your deposits, you get what we call rebates, maybe what you call interest rates on your deposits.
Okay.
Yeah.
Oh, and so then Nini, I think there's something that I'd skipped. There's something I saw that you'd written, like when someone invests in treasury bonds, there's something you called bond laddering. Yes, and I found it to be super interesting. But can you explain it to maybe mtu ajaisikia juu ya bond laddering? Tuseme, I think you'd use the example of 1 million shillings. You want to invest 1 million shillings. Yes.
Okay, so bond ladder is a very useful strategy to invest in T-bonds, maybe to grow your bond portfolio.
Okay.
And how it works is that it works this way. So let's say you have, okay, I'm trying to use numbers that will be easy to work with and that make sense.
Yeah.
Okay, so let's just work with $1 million. So let's say you want to invest $1 million right now in bonds. So instead of investing that 1 million in one single bond, you divide your 1 million into maybe a series of 5 bonds. So that's you have 200k per bond.
Yeah.
Right. So what you're trying to do with bond laddering is that you're trying to build a ladder with a series of bonds. So you're trying to stagger bond maturities and also the interest rates, because different bonds have different yields and different bonds have different maturity dates. So I think you have seen okay, I'm not sure if you guys are familiar with this. Maybe you're not following the markets keenly like I do. But recently when the yields from government bonds have hit 18%, 17%, guys who had bought treasury bonds maybe last year, which were fetching maybe 12.5%, 13%, are rushing to the secondary market to dispose their poorly performing or maybe low yielding bonds, because now bonds are fetching high returns. Because why will you hold your 10M that's giving you 12.5% for 10 years while you can get a facility giving you 19%, 18% for the next 9 years? So it makes sense. But now the disadvantage is that you'll have to sell maybe a bond at a loss in the secondary market, because no one wants to buy a low yielding bond. So the price is very, very chaotic or very pathetic. So a bond ladder is where you distribute your bonds maybe in a series of bonds, like we said, 5 bonds. So you have maybe one bond maturing 1 year from maybe 2 years from now, another bond maturing maybe 3 years from now, another one 4 years, 5 years, depending. You can stagger them anyway, but just have to they must have different maturity dates. So you can try to achieve different things with the bond ladder, where one is getting a monthly interest payment every month, because you said bonds you are paid 2 times a year or semi-annual payments. So if you have 6 bonds, that's 6 times 2, you get 12 monthly payments. The good thing in CBK is that in their prospectus they'll tell you, okay, this bond coupons will be paid on maybe July, maybe Feb, and maybe 2 plus 6, that's August. So Feb and August of every year. So you can get different bonds that are paying an interest, maybe a coupon at every month of the year. So with that you can easily build a portfolio that gives you passive income every month. Now the other thing that's good with building a bond ladder is that you can also reduce the chances of something like the fluctuation of bond yields that has happened. So now instead of being locked in the 12% yield that we talked about, maybe that was bonds were fetching last year, you still have money to invest in bonds that are being floated nowadays when the yields are high. So in your portfolio you'll have a mix of both. Which is very good, because you have spread your risk. So for you are comfortable, because if the yields rise, you can still invest more money because you're building a ladder. And
na yule sema right now, like it's so simple. I just naenda kwa hiyo nini na open a CDS. It's not like a long process.
It's not a long process.
So if I was to Google CDS,
it's CBK. So you can just go to the CBK website. You'll find Gov't CSD. Maybe you can just Google Gov't CSD. So on the CBK website, you just open there. You fill in your details. You open your account. Then maybe within 24-48 hours you'll get your account ready. Now the only challenge for you to build a bond ladder right now may be the number of bonds being issued by CBK, because I think right now we only have 2 bonds in that have been issued that have been floated by CBK, and also the maturity dates, because you are looking at different bonds, different maturity dates, and also different payments, monthly payments for the coupons. So there are those factors that you're trying to look at, but with that also you can also chip into the secondary market and get bonds that have been issued in the past that maybe meet the requirements that you want. So maybe if you want a 4-year bond that's not in the market, maybe you can go in the secondary market, maybe you'll find one. And going in the secondary market, make sure you use a stockbroker or an asset management company, because they are most affordable. Because banks are
hiyo sasa now we go back to zilikuwa tunaongea kina CIC. CIC ni money market peke yake.
Okay, they are okay. Maybe they will bring. Okay, CIC isn't yet offering the option to invest in T-bonds, but there are other asset management companies like Kuza that can give you the option to buy bonds in the secondary market. But also stockbrokers can give stockbrokers like Faida Investment Bank, AB Access Africa. Yeah.
Oh,
also give you the option to access the secondary market.
And is it still as safe as dealing with CBK directly?
The only difference is that there's a small charge that they'll charge you. Yeah, that's like, the only difference. The service fee, because they're coming in there to provide the service for you. Yeah,
but it's not like a ridiculous 5% or...
No. It's actually quite low. I think it's even less than 1%.
Yeah, okay.
That's for stockbrokers. But for banks, they charge what you call entrance and exit fees. So if you're buying a T-bond, they will charge you the entrance fee, or maybe the access fee for that bond.
So according to you, there's no reason to buy T-bonds and what through a bank. Just use.
Okay, maybe some. Okay, I've not tried all banks, but mostly from my experience and from what I've seen, it's not advisable.
Yeah.
So you have to, the average person doesn't know the details or maybe the differences of the alternatives. But if you know how it works and you go through the details and the transaction, the what do you call them? The costs that are involved, and you are sure that comparing to going through CBK or maybe going through a stockbroker, that you have a good deal, then you can still go for it. I'm not sure about all banks, but most banks that I've seen charge very ridiculous costs.
Okay. Because it's so interesting looking at hizo rates. Like if someone was to kujipanga vizuri. And then you talked about spacing that's dependent on CBK, yeah?
Spacing, no. You can also control that, because now the spacing, now you can have a 2-year bond, a 3-year bond, a 4-year bond, a 5-year bond. But what I said is, if you want to have maybe a perfect or maybe a good bond ladder, you have to access the secondary market, because that's where you can get different bonds, many bonds, because CBK only floats bonds monthly, and they will float like 2 bonds per month, and maybe those bonds that will float this month they don't have the qualities that you're looking for. But we are talking about someone who has that maybe the 1 million to invest right now. But if it's something that you want to build over time, maybe the next 2-3 years, I think there's time. Within 3 years, I think you can get the good bonds that you're looking for.
Oh, okay.
Yeah,
okay.
With time you can
in the meantime, you can invest in this.
Yeah, then
and every time there's an opportunity, invest in
another
Evo.
And
then before you know it, you've spaced them.
Yeah, you've spaced them well,
yeah. You can just, you're liquid to some degree.
And also still getting your assets are generating cash.
Okay.
Like the guy who bought land in Kamulu, who's just sitting in there
waiting for the road to be constructed.
Hapa
njia ikikuja, njia ikifika hapa,
and as Jared passed through.
Then another thing I also saw you talking about is people can invest in the Nairobi Stock Exchange.